CNBC TV18.com and Aditya Birla Housing Finance present Happy Home Loan Podcast.
Hello and welcome to CNBC TV18.com and Aditya Birla Housing Finance present the Happy Home Loan Podcast. On this podcast, we will deep dive into the dynamics of India's booming housing market, explore the ease and accessibility of housing finance, and highlight the transformative role of technology in simplifying the home buying process for people like you and me. I'm your host Mridu Bhandari and I'm joined today by Pankaj Gadgil, CEO and MD of Aditya Birla Housing Finance, who's going to share his expert insights and practical advice for potential home buyers. And we'll tell you all the latest trends and innovations in the housing finance space, helping you take informed decisions in your home buying journey. Welcome, Pankaj. Thank you so much for joining us here on the podcast. First up,
Thank you.
what do you make of the housing boom in India? What are some of the key growth factors that are driving this?
It's a great question. So, Mridu, I think first and foremost, I think if you look at the average age of the people who are taking a home today, that is drastically reduced in the last 10 years. And you'll be surprised that today the average age of somebody who's buying a home first time has reduced from 35 years to 30 years. That's a big trend that we are seeing. The second thing that I can say is that the average size of the household in India, because of the nuclearization that we see, that has also gone down from about 5.4 to about 4.2. So, which actually is bringing up the demand of housing everywhere. The third thing that I see is that post the pandemic, I think most of the people who are there around, I think they felt a genuine need of also making sure that you had work from home, sorry, and stay from the home and also get educated from home. I think that was one thing which came in as a trend. So people were looking at larger homes, as compared to what they were looking at earlier. That also fueled the growth. The last important trend that I would want to emphasize is that if you see the rental yields in India, and specifically for houses which are close to the workplaces and also schools of children that you will have, those yields actually have really inched up. So the trade-off between staying on rent versus owning a property, I think is tending towards the latter. So I think that is also fueling this boom. And last but not the least, I think the PMAY scheme, which all of us know, which was launched in 2015. I think in the last 8 years, about 3 crore houses have got created and built in the affordable space, both in the Grameen space and also in the Tier 1 and Tier 2 markets. So I think these five large factors which are driving the housing boom in the country.
Right. And a lot more aspiration also of India's youth
That's right.
and a lot
That's
more
right.
disposable income than before,
That's right.
right?
That's right.
Let's think about this from the home buyer's perspective. Now, as a home buyer, what are people looking for from their housing finance partner? Of course, a competitive interest rate is perhaps top of the list. What else? And at Aditya Birla Housing Finance, how are you differentiating yourself from about 91 others who are providing similar services in the Indian market?
I think when we did our customer insighting, Mridu, I think there are 3 or 4 pain points which came up, clearly in the entire home finance journey, and I'll speak more about the journey. First and foremost, I think customers like you and me feel out of control. They don't feel in control in the entire journey. Second is complex terminologies, complex terminology, LTV, and many other terminologies, technical, legal. So people get confused as to what is legal, what is technical. They also express akelapan in the entire process. They feel that I am lonely in the process. There's nobody who's standing beside me. And another interesting thing is that entire process seems like a bhagdod for the customers. So these are the 4 pain points that we focused upon when we've entirely transformed our journey the entire home loans that we are putting up together. So the focus is at all points of time, how can you make sure that the customer is always in control. And we introduced a feature much like the food delivery apps today, or much like the passport application that if any one of you has just raised the passport application, at all stages you get updated of where you are in the process. So the feeling of not being in control is addressed through this feature. Of course it requires a very detailed digital platform to get created, which has one of these features as track my loan feature. The other thing is making it more and more predictable, for the customer. So when the customer is entering into the conversation, basis is bureau score, basis is profile, I think we are able to quite clearly tell the customer what are going to be the terms. So the interest rates that you just spoke of, it's very clear that what is the interest rate that one is going to get. The other thing which we felt that today is the age of gamification, right? Everybody wants to check as to can he do something DIY. So I
Yeah.
think to that extent we build very interesting 7 calculators which tell the customer there's a affordability calculator, there's a eligibility calculator, there's a calculator for defining the loan to values that you can get. So it's quite interesting. So the customer exactly knows. So building on the theme of predictability, when I looked at interest rates, I spoke about interest rates. The second thing is about how much EMI are you going to get. What is the affordability of the home that you should be looking at. So we have made this very predictable. We've ensured that the customer is never out of control, and the entire turnaround time for onboarding, right from prospecting to onboarding to sanction and disbursements, the entire end-to-end turnaround time for the customer today is top notch. So I think that is what
So,
we have.
so what is that turnaround time? If I go out to take a home loan today, in how much time is it going to be
I think
sanctioned?
the financial sanction, for a customer like you, it's going to be less than 5 minutes. I
Oh,
don't think
wow.
it's going to
Less
be
than 5
less
minutes.
than 5 minutes because DPI has come up today, so we can pull your bureau very quickly. You will be able to give us the bank statement through an account aggregator very quickly, and the assessment can happen. Of course, as we understand today, in a home loan versus any other unsecured loan, there is also an element of the property which is coming as a collateral. So there is some time taken, for the valuation and for the technical to happen,
Right.
for the title to be very clear. So I think on those there will be a couple of days that will be spent there, and then depending upon the timing that you will get in the registration office for registering your document, the days will get added for the disbursement to happen. So it happens end to end. If everything falls in place, it can happen within a week of your decision to buy a home and also get it financed. That's the lowest that you
And
can
the
go
housing
at.
finance company is going to help me also figure out that this property is not disputed or there are no cases against the builder. It's in the clear as far as the environmental regulations are concerned.
Absolutely. So we do a detailed title search. We do a title search which is spread across several years, which tells us the chain of how the property was transmitted from A to B to C, and whether there are any encumbrances. Like you rightly said, on the property, are there any disputes on the property? So the entire focus, in the journey, to put it very simply, is that we have tried to make this a happy home loan journey, where I just spoke about Akelapan Bhagdod, earlier. We want to make it a very happy experience. So that's really the transformative journey that we have embarked upon when we are
Wonderful.
serving the customer.
Wonderful to hear that. And one more question from the point of view of the home buyer. How do you decide what interest rate you're going to charge me?
I think it's a function of first and foremost. I think the yield that we are talking, or the interest that we are talking about, is linked to the risk that we are underwriting, which leads to probability of default that the customer may have. And there are models that are working behind to predict what is the probability of default for a customer. So that's the raw material basis, which is a markup that you have. uh, Putting it very simply, I think the profile, the bureau scores of the customer, the property that you are buying, are all the approvals in place, in which domain the property lies, what are the valuations of the property. I think those are the determiners, of interest rates for the customer. And then there are range bound interest rates starting from 8.6%, upwards, that we charge depending upon these three things that I mentioned.
Right. So a salaried professional will have a higher chance of getting a good interest rate versus maybe an early stage entrepreneur who's just started out.
Possibly. It also depends upon the volatility of the industry that you are into, because finally, when you're doing underwriting, and it is very simple, underwriting has only two rules. One rule is you have to assess the capacity of the customer to repay your loan, and second is the intention to repay the loan. Intention gets established because of bureaus now coming into India. It's been 2 decades now that bureaus have come into India. So the intention of repayment gets defined by your past track record that you've had. So if you are a customer who has a credit history, then you are able to establish basis past trend lines, basis your derogatory behavior or a progressive behavior, which helps us in identifying the intention to repay.
Right.
The capacity to repay gets established with your sources of income, how regular are the sources of income, the nature of the income, whether it's volatile, not volatile, and what has been the growth also, in the income of the customer over the years. So I think those are the two, broad, matrices. And in the second matrice, the disposable income also, which is available. So we look typically at the fixed obligation to income ratios which the customer will have
Yeah.
to determine, what is the installment that the customer can actually afford.
So this is quite a fragmented and competitive market in India. Give us a sense then of the kinds of innovative products that Aditya Birla Housing Finance offers, and how are you different from the rest of the market?
I think the aim is to be n is equal to 1. That is very clear. And I think, like you rightly said, in India, there are so many, demographies. The property laws are, so different. The jurisdictions are also, extremely different. And of course, the income profiles also are very, very distributed. So our approach obviously is make as many canned products so that, it is easier for the customer to understand those products, and also extremely simple for our employees and channel partners to also communicate those propositions to our customers. So we have more, over 20 odd, propositions that we have, and of course there are lots and lots of sub variants within those propositions. To name a few which are very differentiated, and I will take a lot of pride in, saying those. I think first and foremost, we have a product which is a step up product, for the early boomers. So customers who have just joined the workforce, who've just had a 3 to 5 years experience, just started their career. We offer a very interesting step up product, so which calculates what is the growth that you will have in your incomes over the years, and then suitably modifies the EMI. So technically you get a 30% additional EMI, and you can afford a larger home, versus what you would afford. That's a step up product that we've got. For the customers in the 50s and in the late 50s, there's a step down version where the customers would want a higher installment in the beginning,
Yeah.
and post the retirement they would want a lower EMI. So that's a very interesting proposition for salaried individuals who are 50 plus. When it comes to self-employed customers, there's a very interesting proposition that we've got, which is a micro loan against property, which is lending up to 75 lakhs. The income sources could be an assessed income, because micro and small and medium businesses may not have the entire income assessed, while GST is moving up in the country, but there will be some unassessed part of the income which needs to be tabulated. And even if there are the property has some minor deviations to be taken, those are accounted for with suitable mitigants, and we're able to structure a micro loan against property. The other propositions that we have, there is a very interesting proposition that we've got, which is called Pragati Home Loans again, which is again a combination of a formal income and an informal property, or an informal property and a formal kind of an income,
Right.
which is lending up to 1.5 crores, which is again customization at scale that we've been able to bring. And last is for the emerging developers that we've seen, especially in the Cat 3 and Cat 4 markets, where ERA is just picking up and the size of the projects are also very, very small, below 10 crores. We have something called as micro construction finance, a very interesting proposition for such developers as well. And there, of course, we do the retail financing also in these projects that they develop.
Yeah.
So there is, a two-way that actually happens on the developer side as well, and also for the end customers who buy in those projects. So these are some of the propositions that we've created, which are very differentiated
Very
from the
interesting.
marketplace.
Very interesting. So geographically, which is your top market then in India?
Maharashtra right now, but we are very granular. So we are present in 19 states, and we serve 8,000 pin codes in India, which is 85% of the total addressable market of the country. So we are quite, I would say, universally present in the country, and we are a true full stack player. So we are delivering prime housing, affordable housing, loan against property, and also developer finance.
And are you seeing increasing demand from tier 2 and tier 3 cities
The
now?
demand is across the circuit, so I will not say that much. But like I said, property prices have scaled up more in the tier 3, tier 4 markets
Right.
versus the tier 1 markets. But because of the pandemic, because of nuclearization, because of urbanization, we see demand across the board. The
Got that.
opportunity is very large to leverage.
Got it. Okay. So I want to touch upon two trends that we are living with these days. One is the fact that, of course, we are seeing the digitalization of everything around us. And at Aditya Birla Housing Finance, also, you have transformed your operations using emerging technologies, harnessing AI. Give us a sense of what's happening on that front. Two, We are also in the era of instant gratification, where a customer wants everything at a click of a button, swipe of a smartphone. So, speed is really, really important. But in a product like a home loan, obviously the risk assessment takes time, like you said. So, how do you strike that balance between speed and accuracy and safety?
I think it's a great question. My simple, there are four terms that I often use to understand how the trends are of customers in consuming financial services in India, and be it loans, investments, be it even protection. I think these four terms are very important, and those four terms, in my mind, are: customers today want things which are perfect, something which is delivered now, which is convenient to consume, and which is customized. So these are the four, very very important trends that you touched upon. And I think when you are dealing in financial services, you have to keep these four when you are designing your delivery to the customer. I think that is the key focus. So first and foremost, I think we have created several digital platforms within the organization. There are five of them. But from onboarding the customer, we created something called as Finverse, right? And this was created in a record time. And right from prospecting of the customer to disbursement, this platform engages with the customer at all points of time. The My Track feature that I spoke of earlier, which tells the customer at where is he in the journey at all points of time, gets populated on the Finverse platform. It is a platform in the age of APIs and in the age of microservices. There are more than 100 APIs. There are about 35 microservices, 18,000 designers that all of us have put together in designing this platform in a record time. What does this deliver to the customer? It delivers predictability, which I spoke of earlier. So exactly the customer knows where is he in the stage, what is going to happen next to him, which is the document which is required, who's the relationship manager who is dealing with it, what's the turnaround time going to be at the next step. So there is a clear predictability that we have set up. The other thing, which is AI, and you just spoke about AI, also you hinted upon what are we doing on analytics. I think behind the scene, what is cooking is that there are 15 models that we have created, right again from onboarding to the post disbursement management for the customer, which again makes it very predictable for the customer to consume. And of course, we leverage DPI, we leverage the bureau in a very meaningful way to ensure that the entire journey is happy, for the customer. That is what we do there.
Any surprising bits of data that the machines have thrown up? The different models that you're deploying, you're analyzing data of the consumer. Anything that has been a bit surprising about consumer behavior that you've seen over the last couple of years?
I think when we look at data, I think what's very important is consistency of information, because when you create models and you do a typically A/B testing, of models the way we call it, it throws up surprises, and it throws up surprises, especially in the tier 3, tier 4 markets, where people, where the income that you assess may not be sometimes very formal. So what will come up, with what phone do you use versus what is the square feet of area that you live with, versus if you are working in a shop, how many square feet of the shop that you're owning and what's the income going to be. You'll be surprised that with the traditional models that you build, of the number of footfall that you will get in a shop, versus a 400 square feet area versus a pin code that you are actually populating the number with, you'll be surprised with what income levels get generated. And especially in the tier 3, tier 4 markets, those numbers are surprising. So I think the beauty of the entire thing is that you keep learning from these experiences and cook all this as ingredients to keep enriching your models at all points of time. So analytic models is all about and machine learning, all of us know. So you have to make sure that the models train themselves.
Right.
It is harder when it is assessed income, which is not straight jacketed. But I think the models have to keep improving at all points of time, so that we are able to deliver predictability that I spoke of earlier.
Right. Okay. So if we peep into the future and we look at some trends that will shape the home buyer experience and expectations, as well as everything that the housing finance companies have to offer in India, what are some of the top trends you are tracking and building the future on?
I think, Mridu, just like how we consume e-commerce, today, in my assessment, home finance will be a cash on delivery product.
Oh.
That is what will happen, and we are working towards this, where every other thing apart from delivering the property document, because finally the property document has to be delivered
Mm.
to the housing finance company. It's a collateral that we keep. I think everything else can be achieved. Do it yourself, or also doorstep. You can also use bots. You can also use mobile applications to render that to the customer.
Mm.
So I think the future trend in my estimates is, today it is a very, I would say, phygital process.
Yeah.
But in my assessment, in times to come, this will become a cash on delivery product, and
Fully digital.
fully digital. And once even land records get more and more digitized, even today we are seeing the title search also happens digitally. I will not be surprised, that there will be a day where even the physical property documents don't need to get handed over. And there are some examples, in developed countries where that also doesn't happen as a stage.
Right.
It's a e-contract which actually happens. The lien also happens digitally. So there will be a day where that can also happen, because see, finally, we're all looking at the four things that I spoke of, right? Perfect now, convenience, and it's also customization, personalization. So more and more you add to convenience, the customer finds that time
Yeah.
to do something else. It could be entertainment,
Mhm.
it could be better quality of life, it could be
Right.
health. So I think everything which enables these four is what is the trend, shifting to. And I think we as an organization, I think have understood this trend. I would
And
say,
how soon is Aditya Birla Housing Finance going to be on
I
this?
think the next 12 to 18 months, I
Oh,
think
wow.
we should be there,
I
because
was thinking more like 5 years, but
no, no, no. I think
amazing.
12 to 18 months. And I think there is a lot of work, in the space of digital public infra, which is
Mm.
getting created.
Yeah.
We earlier saw things getting done on the contactless, physicalless, layers. Today we are seeing work that is happening on the consent layer. Today we are also seeing the work that is happening on the ecosystem layer. So what you look at account aggregator, for example, is a consent layer that, we are talking. When you look at ecosystems, it's ONDC, which is, coming up there. So that is also going to accelerate this trend that I spoke of. And of course the digitization of land records is so critical
Yes.
for it to become even more frictionless, as a process. And I think the models that they're creating, actually recently, in fact yesterday only, there's a guideline which has come from the regulator also, where they've recognized that scorecards are being used by the NBFCs, HFCs, and also banks.
Yeah.
And there should be a model governance around how scorecards get created. So there is now going to be a regulatory oversight over what we are creating as well, which is very good. That makes it even more transparent, for all of us. So 12 to 18 months, I think, is where we have
Good.
to get this
Good to
going.
know that. And finally, as we wrap up, what is your practical advice to home buyers who are just about starting their journey to go buy a home and get financed?
I think three things. When I look back over the years, when I took a home finance, and when all the colleagues I see around, and also a lot of businessmen that I've engaged, I have dealt with the MSME segment also in a very large way in my past experience. I think three things which come up very clearly in my mind. First and foremost, don't be over leveraged. Yeah, so there'll be temptation, but make sure that the obligation to income that you have
Yeah.
doesn't cross 50%. So, and of course, as incomes rise, those percentages can be higher, because disposable incomes don't change that much. So make sure that the obligation to income is not in excess of 50%. That's the first golden rule. The second thing is, make sure that the credit history is pristine,
Mm.
because just the way in many developed countries, your social security number decides many other things. In
Yeah.
today, at least in the way financial services is consumed, bureau score and how your trends are on the bureau is very critical in assessing a customer. it
Right.
it also means commercially you lose out if you don't have a great credit history, because
Mm.
most of the institutions price their loan and also the value of the loan to your credit history. So make sure that your credit history is pristine. uh, have the habit, and there is an app that we have launched which is called ABCD, which is everything finance made as simple as ABCD, which we launched recently from the Aditya Birla Capital stable, which has credit track as a module where you
Mhm.
can track your credit score. You can also get inputs of how the credit score can be improved. So I think use that application, download that application, use that application, because credit score is so critical. And the third thing is that often we see that customers who have taken home loans, of course, and the home loans typically have 15 years, and we see typically customers completing the home loans within 7 to 8 years.
Right.
So in that journey, when you cross 3.5, 4 years, there will be a residual amount. So if you've taken a 1.5 crore loan right? And you've brought it down. The principal has gone down to 1 crore 90 lakhs. There is still a 50-60 lakhs amount which is available for you to avail. So instead of looking at an unsecured loan, which could be even more expensive, I think you should certainly look at topping up your loan, because the interest rates are going to be lesser, the tenor is going to be larger, so your EMI is going to be lower. So I think these three things are so critical. And in summary, I think we as Aditya Birla Housing Finance very, very focused in providing a happy experience to our customers in times to come and even today.
All right. Thank you so much, Pankaj, for being here, sharing your valuable insights, and of course, guiding our potential home buyers on the Happy Home Loan podcast. That's a wrap of this special podcast. We hope you found this discussion useful and the actionable advice that Pankaj has shared here today. Hope you navigate your home buying journey with ease. Thanks for joining us. Goodbye.
It's really been a pleasure.
Thank you.
CNBC TV18.com and Aditya Birla Housing Finance present Happy Home Loan Podcast.